In my third month of trading, I was able to take a $400 account and turn it into $4,000 in a single night. Now, in all honesty, I soon lost all of that, but the point is, I made it. And I say that just to say these 3 words. It is possible. Now, if you stick with me to the end of this video, you not only learn how I did it, but more importantly, you'll learn how to sustain this growth over a long period of time. Let's go. Alright guys, so we're going to go through 4 steps that, if followed correctly, could allow you to grow a small account relatively fast. Step number 1, you want to use a broker that allows you enough flexibility, or in other words, leverage. If you're going to be trading a small Forex account, you're already at a disadvantage. Forex brokers that are regulated in the US have a max leverage of 1 to 30, which means your $200 account, $300 account, $400 account can go but so far unless you're holding swing trades for a long period of time. You're not going to be able to execute the lot sizes that will allow you to grow your account really fast. That being said, what you'll see is most retail traders tend to pair up with non-US regulated brokers. Non-US regulated brokers provide way more leverage to traders and allow traders more room to risk more of their capital. Now, that being said, it will be irresponsible of me to not warn you that more leverage, although gives you more possibility to grow that account very quickly, also gives you the possibility to lose that account just as quickly. When you're dealing with high leverage accounts, it's very, very important to know what you are doing. If you don't know what you're doing, you're just going to blow account after account after account. Be sure that you know what you're doing and you have a strategy that you trust before you start trading high leverage. Now, when you need to do so, you need to sign up with a broker. My personal broker of choice is Sway Markets. Sway Markets is a trusted broker with low commissions and fees. I have never had any issues with them, and when it's time for withdrawal, my money is always there. If you need a broker and you are interested in signing up with Sway Markets, the link will be down below in the description so you can sign up. Step number 2, you need to understand how to identify a trending market. This is what I was able to identify just 3 months into trading. If I was able to do that just 3 months into trading, you certainly can do so as well. We're gonna hop on the charts and identify a trending market, and I'll show you exactly how I traded, which allowed me to flip my $400 account and turn it into $4,000. All right guys, so we are on the gold chart and I wanna show you an example of a trending market. So the first thing I wanna do is identify either an area of support or an area of resistance, because that's what's going to allow me to identify the beginning of a trend. So we're looking at this chart here, and as I draw this area of resistance right across here, that I'm able to see an area of significance right over here, okay? Naturally, I wouldn't get in on the first move. I want to see some proof that price is actually going to reverse, because obviously before this point we were on an uptrend. So I need some proof that price is going to reverse. Price shows me this proof by having a big impulsive move to the downside over here and then has a correction. And this is where we start taking our entries. So the corrections in the trending market are going to be key in terms of taking your entries and also stacking up entries so that you can grow that small account relatively fast. So let's move on to step number 3, which is having an airtight risk management strategy. Now, when you're growing a small account and you want to grow relatively fast, typically taking 1 to 2% per trade is not ideal in the beginning. Now, it is ideal for a brand new trader. If you're a brand new trader and you're still learning, definitely take 1 to 2% because you're going to make many mistakes along the way. However, if you're a well-seasoned trader and you want to turn a small account into a pretty big account, then I would expect that you have a pretty good strategy that you trust in, and you can afford to risk a little bit more in the beginning stages only to grow this account to a certain point where you can then dial back the risk and then you can trade a little bit safer. So for me, with a $400 account, I'd probably start off with a 0.20 lot size, or in other words, $2 per pip. So let's write some notes over here, right? So we know that we have a $400 account, and what we want to do is, at this stage, we started off with a 0.20, okay? We have a 0.20 position right over here, Okay, so the next thing I want to do now is just follow the trade and identify when there's a correction happening. Okay, so keep in mind we're on the 1 hour chart. When I was doing this with German 30, I was on the 5-minute chart, so obviously that's what allowed me to do it within the night. You can also do this on the 5-minute chart with gold. You just have to identify again support or resistance that can lead to a decent trend where you can stack in during the corrections, just as you see here on the screen. Okay, but just for visual purposes, let's just stick to the 1 hour, right? This trade continues to move along, and if we go down to lower time frames, this will be very clear that this is a correction right over here. It's a flat correction, but it's still a correction. This would be an opportunity to stack in. So the rule here during the downtrend, during this correction, is so long as the high of this correction does not go past the previous low, then we are still valid. What I mean is the previous low was right over here. Okay, so as this is correcting, I don't want the correction to get past this area and break the previous low, because then it starts to look like a reversal. Okay, it does not pass the previous low, so I want to also stack in at this area. Now, the key thing here is as I'm stacking in, I need to dial back the risk. Okay, I don't want to put myself in such a huge hole, because to be honest, the market could reverse at this area and I don't necessarily want to take double the risk, right? So I'm going to take half the risk. My initial position was a 0.20, but all of my stacking positions are going to be less than that. So over here, I'm going to put in a 0.10, right? So let's write that down, 0.10 stack in. And again, that just means that I added a 0.10 position, but that 0.20 up here is still running. Okay, trade continues to go. We have another correction. Where was the previous low in this trade? Previous low was over here, right? This correction, right? This correction, the high of this correction does not pass the previous low, so this is valid for another entry. All right, I enter again right over here, another 0.10 right over here, 0.10, and we continue to follow the trend. Okay, so now in the next correction we get close, right? So let's look at the previous low of the correction, right? Matches it but does not pass it, does not close above it in any way. All right, so this trend is still valid and I can actually stack in again right over here in this area, right? I'll take another 0.10 right over here and we continue along until we get to an area of support, right? And we end our trade at the very bottom right over here. Okay, so that being said, let's calculate how much I would have made on this trade and ultimately what I would have turned that $400 into while following this trend. So I started with a 0.20. Let's calculate the 0.20 first. So from this area, right, where I took my first initial trade to the bottom, we got, wow, we got a little over 1,000 pips over here. Little over 1,000 pips. Yep, that's from 1926 to 1817. Over 1,000 pips over there. Now, does that happen every day with gold? For somebody who trades gold religiously, I can tell you that does not happen every day, but gold was very volatile during this time period. So again, this still can happen if you catch it at the right time period, right? 1,000 pips nonetheless. Now, that would have given me $2,000 just from that initial position, that 0.20 position. That's $2,000 just right there, right? Let's keep calculating. Next position is right over here. From here all the way down, that is, let's call that 850 pips, right? 850 pips times $1 a pip is $850, bringing our total to $2,850. Let's continue on. The next position I took is right around this area right over here. And as we drag this downwards, we see that this position made about, let's call it 580 pips on this position. So that's going to be about $580. Okay. So now let's add to our total. $2,850 plus $580 gives us $3,430. And finally, last but not least, our final position that we took, which is around the same area over here, but a little lower, right? We dragged this down to see how much money we made, and we're gonna call this about 560 pips. Okay, and let's add that up to get our grand total. So that's $3,990, guys. $3,990, basically $4,000. If you add that to your initial starting balance, you would have a new balance of $4,400 just about. All right, and that was just from catching one full trend. Now, obviously, this is not a 5-minute chart, so you're not going to do it in one night, but I still think this is a relatively decent time frame to make that type of money. If we calculate how long this entire trend took to complete, let's see, it took about 7 days and 16 hours, just about 8 days, within a week pretty much. This whole thing developed within just 7 days, guys. So guys, this is more than possible, obviously. You turn a pretty small account into a very decent sized account. That would be something to be proud of, and that's something that you could do just by following what you saw here. So step number 4, last but not least, is to review your trades on a daily basis. I know you guys have heard about reviewing your trades, but maybe you've heard it on a weekly basis, but because you're growing a small account and so many little things can happen while doing that from trade to trade, I strongly recommend that you review each trading day that passes by. What tends to happen to a lot of traders that try to grow small accounts is that after a couple of wins, they tend to get ahead of themselves, and instead of dialing back the risk, they up the risk, thinking that they'll get to the goal so much faster. It almost always leads to a blown account, and you don't want that to happen to yourself as well. You want to notate all of the things that you did wrong, if you took some losses or if there's certain things you did not understand, and you want to notate the things that you did right and how to repeat those same behaviors. Make sure you are accountable, because the only way you're gonna have a shot at doing this, and it is a very hard thing to do to grow a small account, the only way you have a shot of doing this is by constantly challenging yourself to grow each and every day and by each and every trade. Ultimately, I'm showing you this because I want to show you that this is possible and you can definitely do it. But it is by no means easy, and even if you were to do it, it doesn't mean you'll be able to sustain it. So you want to be sure that you are a trader that has a pretty solid plan, and one that can be disciplined to that plan, so that even when the wins start coming in, I don't get so ahead of myself. I stick to the course and I continue to grow my account little by little each and every day. Bonus tip, guys, don't forget to withdraw. When you make this type of money in the market, withdraw something. Even though you want to grow to millions of dollars, I know, I was there, but I guarantee you, although I made all that money that night and I was so excited, what killed me on the inside is that I never got to withdraw a single dollar of that money before it blew. Trust me, you don't want that feeling. You want to be growing your account, but you also want to pay yourself for all your hard work as well. All right, guys, so all of you guys with small accounts, I hope this gave you some confidence. This can definitely be done, but it will take a lot of discipline on your part, right? There's no sugarcoating here. This is going to be very, very difficult. But ultimately, you want to become the type of trader that is able to do this and is able to be disciplined enough to keep this going over a long period of time. So I hope you guys enjoyed this video. If you did so, please like, share, and subscribe. And until next time, guys, peace.